4%. That's all we need to create a new all-time high on Bitcoin. But to understand how we got here, we first need to look a little bit into the past, and I'm meaning to go back to last Friday because we had a string of unusual events in the chart, and that explains then why we got and how we got to this price level of 71k. So therefore actually we need to go back to last Friday. That was right here. We have eventually saw a little bit of a wick. This was a very weird price action because the move down, especially on the S&P 500, happened on the second half of the trading session, meaning afternoon New York time. And that is unusual because yes, there are Friday dumps, but usually they set in pretty soon once the opening bell rang in New York. And to have a flat morning and suddenly a huge dump down on the S&P 500 in the afternoon from 1 p.m. on, that is actually very strange. And then we had this wick, and then later on we had another wick. And they would say, okay, that was the end of the session. Now we're going flat, we're going sideways, and now we just slowly grinding higher during the weekend. And yesterday we already pretty late had a move to the upside, and I mean late because also this was after the close of New York. So again, a very strange time, and that's also here very hard to get into the trade. If I quickly look at CBD and then I also look at the exact same time period, also this was all over the place. You can see here price goes down, CBD goes down, so the delta goes down, and the open interest, that means positions are closing and most likely longs are closing out. If we then go a little bit further, we're by the way here on the 5 minute, then you can see that right here first we see open interest going down, so positions are closing. Those are very most likely shorts because CBD is going higher, price therefore goes higher, and then eventually you see open interest picking up again, so that is new positions opening, so therefore new longs are suddenly coming in. Then we're seeing a drop again, that was longs closing out because the delta is going down, and then delta is going up again, longs are getting in back into this price action. And then eventually you can see that we're just stair-stepping higher here with the CBD until the price level where we are at right now. And then here, this was then from today, suddenly you see a drop here in the open interest. Again, positions closing, delta going down just a little bit, and now it's going up again together with the open interest. So again, new positions are opening. So as you can see, it is all over the place. What I also found very strange for the fact that BTC is rising is if we look here at the S&P 500, this is on the daily. This right here was Friday's price action. We opened, went higher, then it took a very long time, last few hours we just crashed down, went lower, closed the day in the red. That in itself is pretty bearish. Yesterday was a very flat day, and as you can see there's a gap here between between Friday and Monday, so there is an opening gap. Those usually get filled. Well, that gap is filled right now with today's price action. Then you would say that also BTC would go a little bit lower, but BTC pulls a big FU to everyone and is just rising higher and higher and higher. And it does in a way that annoys the F out of me, and that is that we just have very shallow retracements, kind of sideways price action, and then a move higher. And it happens in the most impossible times, and that is usually after the close of New York Open. In other words, where the liquidity is the thinnest, so the big parties are not behind the buttons anymore, and that is actually the name of the game of this entire rise up. We have seen this over and over again, and right now in the 4 hour, this whole move up, the really good levels are constantly being front one, and the B setup, so the trades that I give you where I'm like, I'm not so sure about this, those are then suddenly the ones that are playing out. Golden pockets, as you can see here, a lot of times being front one. Also gave you one here. That was the absolute prime setup. Also that is not even being hit. Then we had one that was much closer by. That was then also an S&P of this level. Maybe you remember from last week's update. Also this one did not get hit. So yeah, very frustrating, and it almost feels like you just need to get into a position, cross your arms, wait for 24 or 48 hours, and then probably you're in profit. That has nothing to do with trading anymore. That is gambling. It is retarded, but it's just very hard to frame a trade. So you need to look then at something very locally to get in. And then, yeah, in this case, these B setups, these setups that are less likely, and I'm not making this up, this is just data, they're just less likely to play out, are the ones that are playing out. Now, I've also tried a few scalps that I did not give to you because they were less likely to play out, and some of them got stopped out because of this reason. They were not so likely to play out. So it is a bit of a frustrating move up. What I also just checked is how long it took us to go from this low to the price level where we are right now. So then I'm taking with the low at 49k to the current price level. That is approximately 85, 86 days, and then 43%. In other words, from this low to this high, the average rise per day was 0.5%. Let that sink in. 0.5% rise on a quote-unquote bull market, in this case actually just sideways consolidation. That is nothing for crypto, nothing for BTC. So it is a very frustrating, slow rise to the upside, not getting your primed levels, not getting your primed trade setups, and it is this kind of zigzagging slowly higher. It's like iffy kind of trades that are then forming the lows, and also then usually these lows are also being formed outside of the most important trading hours. So yeah, from my personal side, a bit of a frustrating price action. Of course, that's not what you want to hear, because you're here for the trading setups, and I cleaned the chart. Because with this rise up, some of the long trades that we had here from much lower, they're just not validated anymore. I think that we are going to hit the all-time high. I mean, come on, it's only 4% off. I also said already a couple times, once we are going higher, it's going to be a squeeze up 1 or 2 days and we're there. Well, guess what? We're now almost 2 days further. This high has already been taken out, and this one I'm not sure, don't think so. And then we have these two, but like I said, it's just 1 or 2 more trading days and we're there. I would be very, very, very surprised if we suddenly get a dump. Never say never, but I would be very, very surprised if we do not take out the all-time high before we're going lower. Okay, quickly back to the hourly, because now I'm really going to give you my trading setups. There is, we need to go for something more aggressive, right? Because price action is just slowly grinding higher, so we need to go for something more aggressive. This is the Monday high, 69,400-ish. What I hope is that in a little bit when New York opens, price maybe goes lower, taps that previous day high, and then to go higher. This will be a pretty okay trading setup. You could even be more aggressive and then to say, okay, I'm waiting for price to take out these highs and that's it. But mind you, for every trade, but that is kind of the tone of the last couple of weeks, it's just constantly longing the highs. But since they're barely in retraces, sometimes we need to then be a bit more aggressive. So this is the first one that is a long from previous day high. I'm going to put this in right here, and the target, there's only one target for me, new all-time high. I will not take profit any earlier than new all-time high. And then of course this one, but like I said, that one is pretty aggressive. Wait then for the lows to be, wait then for the lows to be taken out and to be reclaimed, and then you enter the long. You put your stop loss underneath these local lows that are then being formed. Very most likely it's going to be a small wick. I cannot imagine that we get a huge wick to the downside, because this is still very bullish. So it'll be very weird if price does whammy and then suddenly goes higher again. So it will be something a little bit slowly, floop floop, and then we go higher, and then this is then your entry. So you can keep probably a very tight stop loss and therefore good risk to reward. Also here the target is absolutely new all-time high. In case we do go lower, and we get a little bit more of a retracement, because well, we left a tiny bit of a CME gap over the weekend because we had 2 green days. It was a little bit of a gap, and then we can still try if we can get it, is to get into a long from this golden pocket. Let me also quickly pull a fib retracement to see a volume profile to see if it matches with anything else. No, it does not. I would still try to long the golden pocket, although it's a little bit in the middle of the range. The reason is because you have these highs right here lining up with this cluster, and then you also had this exact cluster of trading. I mean, look at these candles. Again, we're now on the hourly. It lines up. So I would imagine that you do see some hold up, or you see some reaction looking at the volume profile at that level. And I also wouldn't be surprised if price comes down and stays there a little bit, that this point of control then moves to this level, because this is the next highest volume node right here at that price level of 67,700 to 67,850. 67,700 to 67,850. That is then the golden pocket, and then to play it higher. Like I said, I expect few hourly candles, and then this volume will be the most, and then eventually that will be the new point of control, and then we can go higher. To be honest, I am doubting if we would ever get something like this, because right now price is just so extremely bullish. It just does not give you a good retracement. We have seen now in the last couple of weeks that these prime setups with the golden pocket, with so much confluence, is just constantly being front run, and we're getting this half-ass kind of trading setups that are less likely to play out. If we do get it, of course I will enter the trade. But for now I would be careful. You could try intermediate here, the value area high that lines up with the 0.5 and these two highs. I hope it's visible here on your screen. That is at and around the price level of 68,700. But I will update you on Twitter if I take the trade. But for now I am most inclined, and the most preferred scenarios are taking out the low very shallow and then right away up. Or a backtest of previous day high, and then to go higher. And I actually do not think that we will go back. If we do, then of course you will also right away take out the current daily open previous day high. You get back into the range, so this is already a bit more bearish. I do not think that the bears will let price dump down this much if they only need 4% to go to a new all-time high. That will be it for now. That will be it for today's update. If you like the content, please guys do me a favor, like, subscribe, click on the bell, click on all, so that you don't miss anything. Very good, Ray. And also make sure that you click on the bell and notifications on, so that you don't miss any future notifications. And of course, like I said, I will update you on Twitter if I take any trade or if something has changed in the trading setups. Thank you guys so much. See you in the next one. Bye bye.